Hello and welcome to another edition of Investing for Generations. And after I talked about Wells Fargo in a few videos ago, today I want to talk about my second banking stock in my portfolio. And this time it will be JPMorgan Chase. As always, I will go through the history a little bit, go through the management and the financial numbers, of course. And I will tell you why I think JP Morgan Chase is a way better long-term investment and a way safer long-term investment than Wells Fargo. And we'll also tell you if JP Morgan Chase is a buy right now at the current price. But before we start, don't forget to subscribe, like, share, and comment. Thank you. The company has a very long history. First, it was founded in 1799, so over 220 years ago, under the name the Manhattan Company. Afterwards, it changed its name sometimes, and under the name we know it now, JP Morgan Chase. It was founded in 2000. And it's a combination of several large US banking companies. Including Chase Manhattan Bank, JP Morgan, of course, Bank One, Bear Stearns, and Washington Mutual, which was bought to the company in the Great Recession. It's the world's most valuable bank by market capitalization, with a revenue of over 140 billion per year. And here on the website of JP Morgan Chase, you just can explore the history. Just go there and read. You can learn so much about the company, of course, and with it also about American history. Then, after we talked about the long history of the company, just dive into the financial numbers. JP Morgan pays a nice dividend of currently 3.68%, with a payout ratio of 70%. And if you remember, when I talked about Wells Fargo, they had an incredible high payout ratio of 160%. So the dividend of JP Morgan looks way safer than Wells Fargo, and so it looks like we have here just a very solid bank, at least compared to Wells Fargo, but I will talk a little bit more about the differences on my way through the financial numbers. JP Morgan also have a nice growth rate of the dividend of 16% over the last 5 years, and a dividend growth over the last 9 years. The revenue over the last 5 years grew at 6% per year, which I think is a good growth rate for a big bank like JP Morgan. I mean, this is a big ship, and of course it's not growing like the fast grow in the market. And also the banks, of course, are not the fast grower. So 6% I think is very nice. And per statistic.com, we can see that the main revenue come from consumer and community banking. So that's the biggest part and the biggest chunk of the revenue. So JP Morgan is just by a mile the largest consumer banking bank, at least in America. And even so, the EPS, the earnings per shares, grow around 10% per year in the last 5 years, with a dip at the end right now with a pandemic situation, which also JP Morgan have to suffer. But after all, this looks good and this looks stable, and this company just earn money all the time. Here we also have a look on the margins, and the operating margin is very nice, even also with a dip right now in the last quarter. But we see very stable margins, very high margins. That's nice. I like that a lot, and this just shows me they have a good business model, even under difficult circumstances or with a low interest rate scenario for the last decade. And of course, way higher margins and way higher returns also as a comparable Wells Fargo. Just look out on my video on Wells Fargo, and then you can see the big differences, profitability, and also in the debt and the payout ratio of the dividend, of course. And then you see just which is a better business right now and which is in better shape. And as I told you, even with a very low interest rates over the last decade or so, JP Morgan earns a lot of money all the time. If they can earn money under these really, really bad circumstances, I'm very sure they will be good in the future. And at one point, also the interest rates will go up again, and then of course all the banking business model just working even better. But for now they are fine even under this kind of crazy circumstances, because in my lifetime so far it was incredible to have almost zero or even negative interest rates. But we see this now, and we see this now for a while, and I think it will also last for a while. Then also take a short look at the balance sheet. Here we see the debt equity ratio, which is at 1.3 right now. And of course, normally I like debt equity ratio under 1. But with the banking stocks, it's just a little bit different because, of course, they make the money with the debt. This is part of the business model, so you have to look at this a little bit different. Very interesting is to look at the price book ratio, which is at 1.14, and just shows me you can buy JP Morgan right now almost for book value. Then take a look at the management. The current CEO of JPMorgan Chase is Jamie Dimon. He has a long experience in the banking industry, and before he went to be the CEO of JPMorgan Chase in 2006, he was the CEO of Bank One, which merged with JP Morgan then. So he has really, really long experience, even as a CEO experience for 2 decades now. And just take a look how the stock price grow over the time he's the CEO. This is a chart of JP Morgan Chase from 2006 to now. And we see it starts at around $40. We are now a little bit under $100. So this is a growth of the stock price of a little bit over 6% per year, which of course it's not impressive, it's not incredible. It's a nice growing, and as a long-term investor, that's good. A growing rate of 6%, 6 to 8%, it's just fine over the long run. This is what I expect from JP Morgan as an investment. And if I can get this for another 10 or 20 years, I would be happy with that. Then talk about the price, and let's see if JP Morgan Chase is a buy at the current price. I bought my shares on April the 20th for $93.49. The intrinsic value, my calculated intrinsic value, is 100. That's very conservative because it's a difficult situation for all of the banking sector, and so also for JP Morgan because of the low interest, because of the recession and maybe depression who's looming. So I don't know really, but the intrinsic value of 100 I think is very conservative. So I'm happy I could bought my shares under the intrinsic value. I think JP Morgan Chase is a good investment. What's the conclusion then? So with JP Morgan Chase, we have the largest bank on the market, which I like. I like to have the leader in sector in my portfolio. For that, they have a strong market position, and they earn money under very difficult circumstances for the sector, as I tried to explain. And this is a plus, of course, but this is also a negative point because the low interest rates are a big problem for the banking sector. and we saw this now for a decade, and I think also in the foreseeing future we will have these low interest rates. Another risk for the sector, of course, is a recession, and nobody knows how long it will take to recover. As a conclusion for me, JP Morgan is a very solid basic investment for the long run. So that was my 2 cents about JP Morgan. I hope you enjoyed. See you soon for another video of one of my stocks out of my portfolio. But before I leave, don't forget to subscribe, ring the notification bell to make sure to never miss another stock analysis, and give me a big thumbs up. I'm so happy about every subscriber, about every viewer. This motivates me a lot. So thank you for that. See you the next time. Take care. Bye bye.